Hi, welcome to this final tutorial for Module 10, Evaluating Investment Opportunities. Here I want you to think about all the things we've talked about in the course, and this puts everything together and hopefully will enhance your understanding and the interrelationships of everything we've discussed up to this point. This takes place in the form of the class simulation exercise where you have the opportunity to put yourself in the position of an investment manager or advisor to try to come up with a decision of whether you would make the investment or not. If we take a look at this, the class simulation exercise can be broken down into three parts. Part one involves the financial and industry market analysis of the company, the subject company, the target company we're looking at. The second part of that looks at the different valuation methods that we've discussed in the class. And the third part of that is, once we've come up with a value, we look at the ways that we could possibly finance that in accordance with the parameters that are set out by bank lenders and the requirements that investors are looking for. And you're going to be doing this in a group exercise and presenting your results then in the form of a PowerPoint presentation to the other members of the class for comment and review. I would suggest, because the groups are going to be groups of at least 3 and possibly more members, that you take all of these points then and break them down into 3 components, the ones I just mentioned. The opportunity involves a situation where we have a large holding company, a conglomerate holding company that's selling a non-core business. In this particular case, a company that's engaged in the manufacturing of machinery and equipment for the production of solar panels. So the company that we're looking at is a manufacturer of machinery. It doesn't manufacture solar panels directly, but sells machinery to producers of solar panels. And so, therefore, you need to take a look at the industry. In other words, you need to understand what's happening to the demand side. In other words, your customers, the producers of solar panels, what does the industry and market outlook look like for them in the coming years? Because only if the market outlook is positive will they be in a position to buy your equipment, and therefore the company will be able to achieve its sales plan. The reason for this sale is that the parent company, Multinational AG, doesn't feel that this is a core business. The management of the subsidiary company, SolarTech, is frustrated because they don't have the resources right now that they would like to have then from their shareholders. And so maybe separating the company from the current parent company may allow the current management team to pursue business opportunities in the marketplace that they haven't been able to take advantage of in the past because they didn't have the financial resources to do so. And that is basically the motivation of the management. So we're talking about a management buyout here. Part one asks you to take a look at the industry and the company. So what we're going to do is what you should be doing is analyzing the company based on its financial performance in the past, taking a look at whether that performance can be projected into the future. The assumption is that it can be, and roughly in line with what the company has done in the past. And the idea is then also to compare that with what the industry prospects are. In other words, you're going to have to take a look and research the industry to see whether the prospects for the future look good or not. And it could be that although the company may look good from a financial standpoint, that the industry prospects are so bad that you may decide that you wouldn't recommend undertaking the investment because of your concern about the industry. So one of the members of your group could do part one. That would be one part of the exercise. And then please take a look at the requirements here individually and prepare this part of the report then and make that part of your report. Part two asks you to take a look at different valuation methodologies. Once we understand what the past looks like and kind of developed a picture of what the future could be, we're using the future then to make a decision about what the value could be. In other words, you're buying the future, not the past. But clearly, in terms of value, you're a buyer and you don't want to overpay, which means that assuming the company is going to grow over time, using a value based on the past will probably lead to a lower value than using a future-oriented value. Here you're going to be taking a look at 3 valuation methods that we will talk about in the course. That is the discounted cash flow method, and the capitalized earnings method. Both of those are what we call income approaches to valuation. And one market-based approach, and that is taking a look at industry multiples, for example, for machinery or solar companies engaged in the solar industry, and using EBITDA or EBIT multiples, and then using those to derive a market value, and then comparing the two. What you're asked to do here, though, is to conclude by recommending one of the valuation methods. You pick three, recommend one of them, and then explain why you feel that is the most appropriate method for valuation. The third part of the assignment takes a look at the acquisition finance. So you come up with a value, and after you come up with a value, the idea is, how can I finance that value? And the first place you normally go to ask somebody about financing will be the bank. So once you've come up with your financial plan, you present that to the bank will tell you roughly about how much of the value they'll be willing to finance. And whatever the price is, and then deducting out the amount that can be financed with bank debt, represents how much you're going to finance yourself. In this particular case, the two managers of the business can each only invest up to a maximum of $1 million each, meaning a total of $2 million. Now you're going to find that the value of the company is significantly higher than $2 million, and not all that can be financed with bank debt, so that there's going to be some residual that you're going to need to cover. You're going to have a funding gap that needs to be financed probably with a co-investor or with seller financing. And I would ask you here to go back and take a look at the LBO case study and read through that study to see how you might want to address this in your presentation. There's also a requirement to present a written report of about 2,500 pages explaining essentially these three parts and taking into consideration all the requirements and issues here. And I would ask you to read through the information carefully before proceeding to prepare your answer. You've been provided with an Excel template. Now the template is partially filled out with formulas, but some of them are not filled out, which means you're going to have to go in and then complete the template by entering the formulas. And that means you're going to have to go back and take a look at the Excel presentation that goes along with the class presentation, because that will give you some idea, and you're going to be able to then answer some of the questions. So the first part of this is going to involve understanding the financing of the company, and that means to complete the Excel template first. And I would suggest you do this before you actually start to go in and start to write up your reports, because you need the data from the Excel spreadsheets to be able to answer the questions that are required. Finally, there's a document. This is called the Instructions for the Class Simulation Exercise. They set out the major points. You need to read this then together with the information that was provided to you as the overview of the information for the class simulation exercise. And I would ask you to please structure your reports as follows. That you take a look at, you begin, and you should be doing this, by the way, for all of your papers. You should start with an introduction or an abstract. In other words, state the purpose of the report and other background information here in a first initial paragraph. Then you move into the discussion analysis. And here, the report is going to be broken down into three parts. And here a member of the group could take one of the parts, work through that, and then you need to come together in the end. You need to cooperate here and then collaborate in the end to share the results so that each person understands what the other member of the group has done. Discuss this, reach your conclusions and findings, and then present those in your report then in a coherent way. And I'm going to be the investor that you need to convince about this investment opportunity. So we start with the introduction. We move into discussion analysis. Part one is the discussion of the target company in the industry. By the way, I see right here that there's an error. The company is Solar Tech Inc., not GmbH. This was taken from my European class, so I excuse that. That is part one. Part two is the putting together a financial plan, a pro forma financial plan, discussing the underlying assumptions. used in the business plan, and in other words, 2 and 3 become actually part 2 because you need the full forma financial plan to be able to do the valuations. And then to recommend, and you close part 2 then by making a price recommendation. And finally, part 3 is then here, number 4, the proposed financing for the transaction, taking into consideration how much debt and equity should be used to finance the purchase price. And you should conclude by making a recommendation as to whether you would accept or reject the investment opportunity, and you're asked then to support your recommendations from the facts resulting from your analysis. I hope you find this to be a useful exercise, and I hope it helps your understanding and enhances your understanding about the things that we've talked about in the course, throughout the course, because that's the purpose of this exercise. And if you have any questions, please send me an email. I'll try to respond as soon as I possibly can. There may be something that you see in the Excel template. There are a number of the tables that are linked, and therefore you'll discover there's a circular reasoning problem that arises in the DCF valuation, and you need to put in a dummy value to get the spreadsheet to begin calculating. And if you have some issues that arise, then please send me an email. I'm sure that some of the other students have the same will have the same problem perhaps then in answering this. Good luck on the class simulation exercise. I look forward to receiving your reports and look forward to seeing your presentations on the discussion board, and also looking forward to the responses of your fellow students to see whether they came up with similar results or whether they differ significantly. That concludes this tutorial for Module 10